We are back on MorningLine. Dr. Friday's with us this morning. She is a tax preparer extraordinaire.
Thank you.
Phone lines are open if you want to jump in, 737-7587. As today is the beginning of e-filing. You can get going with that now and
start getting
going
money.
After that early return, get the money back. Yes, me too. We've got some lines open if you want to jump in. Let's go to Brian. Good morning, Brian.
Good morning. Hey, do you have your phone there by you?
I didn't bring my phone up with me this morning. I'm sorry.
I was going to ask, can I get a tax credit for me having such a great Russian blue cat? I mean, he's such a great cat. He helps me do all kinds of stuff. He works in my office, and he bothers me and gets on the computer and stuff like that. Hey, I want to tell her she's a big Trump supporter. Now, the Trump changes, I still file my W-2 long form because I do mileage. And for the first time ever, she was the first one who ever said, well, I don't know, about your mileage. I've always claimed mileage because, I go out for my business and I use my own gas. I don't get reimbursed for it. I do not get reimbursed for it. But the Trump changes, I'll still file this. They just put the forms on at the post office. I still file this year. It's the same I did last year.
Right. 17 is going to be the same, but 2018, one of the new laws they changed for you, sweetheart, was one that you're not going to like. The 2106 itemization is gone. Section 2% of your mileage. So you used to use the 2106 and report unreimbursed employee expenses. All of those have gone off the tax code completely. So truck drivers that work off W-2s, people that may do delivery services that have W-2s, you're not going to be able to itemize those expenses that you've always been able to use to meet your Schedule A deductions.
Huh. So, all right, and that again will not take effect until the next tax cycle.
Right, filing next year.
I mean, but you're up to speed. Have you already been sifting through all of this stuff?
I've actually taken 2 full courses on it.
I was going to ask. You already, at this point, you've got a handle on that as you prepare already.
And we're learning. In fact, I've been hired to teach a couple courses myself, so obviously you got to know what you're talking about. But that being said, there's still some things that the IRS doesn't know the answer to, where exactly it's going to fall on the tax return, exactly what form, exactly the 1099-A, which is the one that everyone talks about, that 20% of the LLC or small business credit we're going to get, where these are going to happen exactly. So we don't have the minute information, but we know the basics. Yeah.
And it's your belief too, then, as the president said, it should streamline. Is it just going to be a simpler tax form?
Well, it's definitely going to make it simpler for individuals. Apparently, they're saying that somewhere around, 15 to 20% of people itemize, and it's going to drop somewhere between 8 to 5 or 5 to 8%, whatever, to itemize.
Because they're going to increase the standard deduction, right?
Yes, exactly. An individual went to $12,000, a married couple went up to $24,000. So you've got now a much more difficult time doing it, and it's going to change for families. Families, especially with kids over the age of 17, but under the age of 18 or 19, because in the old one they were still a dependent, and up through college. But if it's under the age of 17, you're going to get $2,000 credit, which in 17 you only got $1,000.
Okay.
So that's great because that's going to offset. Keep in mind that when we talked about the exemption, a $4,150 exemption, that was a deduction, not a credit. That was a deduction. So depending on your credit, depending on your income bracket and your taxable. So if you're at the 10% tax bracket and $4,150, simple math, it saved you $415, right? So if the government gives you a credit of $1,000, you made out more than when they had the children listed. And they're giving you $500 for children over the age of 17. So it's just going to change. But a lot of people are kind of freaking out. Oh, I always had 6 dependents, and now what am I going to have kind of thing. I think you're going to find out for the middle to low, 15% or less brackets, which, of course, now we go 10 to 12 to 25, those are going to be, people are going to put more money in their pocket, even though you don't have the deduction. But it's going to be a change, and people are not going to understand it. And I'm telling everybody, this year, make an appointment sometime in June with your tax person and review your information. And it might be hard until after April because most of us are really buried doing that. But I'm already setting appointments from, basically May 1st on with my clients, and we're doing a sit down to review their 18.
Meaning, so that for the preceding year, then you can do things differently,
well, that's
maybe
it.
to prepare?
Okay, we all know as of February 1st, your W-2s,
Right.
everyone's going to see some change on their pay stub this week, possibly. It should come in effect. It may be this week or next week. The IRS asked everybody to wait till February 1st to put the code into play. And just so you know, they sent a big warning out. Please, this time of all the year, look at your pay stub, because I know a lot of people get their money directly deposited in their bank, and they have to physically go online and look at a pay stub. They're not mailed or handed out, right? So you want to make sure that that information didn't change that drastically. So if you normally bring home $500 and this time you're bringing home $600, stop, review, talk to the payroll department. That is a huge change. You should be looking at maybe a 5 or 10% increase, and that may not always be the case, but on some families it may be. So just really talk to your tax person too. Make that conversation this year, because seriously, there's a big change from 17 to 18, and you need to know what to expect.
Gotcha. All right, let's go next to Ricky. Hi, Ricky.
Hi, Nick.
Good morning. What can we do for you, buddy?
What about your personal exemption on 2018? Does that go away as far as the $4,000, $4,050, something like that? Does that go away?
Yes, sir. That's what they've increased our standard deduction, and they've accounted for. Basically, they've doubled it, and then they've given us credit for other people that would be on our tax return other than the husband and wife. So if you have a child over the age, or a grandparent, or an aunt that lives with you, they'll give you $500. If you have children under the age of 17, they're giving you $2,000.
Okay. So a married couple filing a joint, it doesn't do them that much good then, does it?
It saves you a couple $1,000s. You would have normally have had $12,000, and another 8 would have been like $21,000, and they're giving you $24,000.
Right, but they'll take something away.
No, well, I mean, right now they're giving. We'll find out how it works. I mean, none of us have a perfect system, but at the moment, they've reduced your tax bracket by 3%, and they've given you about $3,000 credit. See how that flies when we get ready to work taxes. I don't know yet.
All right.
Thanks,
thank
buddy.
you.
All right, thank you, Ricky. Yeah, people already thinking ahead to next year, wondering
Well,
how
a
it's
lot of
going
these
to shake
people
out.
have already filed, but they're used to filing under a certain situation, right? And this is change. And you know, probably from your job or mine, people don't take change that well. Even if it can put money in their pocket, it's just the idea of change. For 25 years, I have filed my taxes like this, and now you're telling me I don't have this personal exemption. They're missing the rest of the steps in that conversation. They just hear that something was taken from them, not what was given, only what was taken.
Right, which I can understand that, because sometimes you're used to having it taking and not. But by the way, in terms of the major changes that will be taking place a year from now, it's the first time this radical of a change has happened in how many years?
30 years.
30 years. Think about that. And so you do have a lot of people used to it.
Yeah, I've only been doing taxes for 20 years. So this is like a completely new tax code for someone in my world,
exactly.
right? It's so exciting.
And that's why you've taken these courses. I mean,
well, I have to, because I don't care who you are, you've got to constantly learn, but this is a completely new curve. I like it.
Yeah, I can
like
tell with you, it's a challenge for you, and you got it down. All right, from Ricky to Nikki. Hi, Nikki.
Oh, that's cute.
Hi.
Hey, how can we help you?
Yes, I was wondering, say an ex that you were not married to owes you back child support. How does that work as far as their tax credit goes?
Nothing. Child support is not a tax deduction one way or the other. So you being the recipient would receive it tax-free, and the person paying you would have to pay it after tax.
Correct. So say they fell off the face of the earth for 7 years.
It happens all the time, and you get a big lump. And you're fortunate enough if they finally track them down and they've accumulated something in which you can get the asset from, cash, then that's great. The money goes in your bank, no taxes, comes out of his bank, well, whatever, or her bank, whatever. Bottom line comes, it's not going to be a taxable situation no matter what for you.
Okay, cool. Well, thank you.
Yeah, you bet. Now, obviously, he will have already paid taxes on whatever income he had that accumulated in that front.
And there's a fun thing that actually comes out of the new tax code, divorce. I say fun. That's not probably fun for everybody, but looking from the out. Anyways, if you don't divorce before January 1st of 2019, any alimony you pay is not going to be a tax deduction any longer. So up until December 31st, 2018, if you close on a divorce and you pay alimony, fine. It's the standard, right? The person paying it gets the deducted. The person receiving has to pay tax. But after that, it's treated just like child support. There's no tax deduction.
So All right. If I understand that, does that mean then we're going to see a bunch of divorces just before that deadline?
Oh my gosh, I'm hoping. Let's try. No. I'm thinking from the tax standpoint, people. I'm not talking about from the other. Okay. I'm talking about if you don't do it before that deadline, it's going to change. No, I think what's going to happen is you're going to have the poor lawyers, right? You're going to have a bunch of people now basically sitting down with their tax person because the person paying may be in the 35% tax bracket. The person receiving was maybe in the 15. So they're going to have to take out that 35% in tax and pay that person in the 15 a lot less money because of it.
Interesting. Gosh,
it's going to be fun.
All right. We'll take a break on that note. When we come back, the line's open, 737-7587. More about taxes and your questions with Doc Friday right after this.